SEC Director announced launch of an investigation into Coinbase. Is it possible to relist XRP on Coinbase? What will such an event lead to? We will answer these questions in today's video. The current price of XRP for today is $0.35 and the trading volume for 24 hours is $136,000,000 We are updating our XRP price in US dollars in real time. XRP has dropped 30% in the last 24 hours. Welcome to the Rich Club channel. If you like this video, don't forget to like it and subscribe to the channel. Do you think the analysts are right about XRP? Write the answers in the comments. Giving away 500 XRP at the end of the week. One random subscriber will receive XRP coins. Take a look at the instructions in the comments section. All you need to do is write the word XRP, watch the video to the end to like and subscribe. The Relative Strength Index, RSI, has not been definitive over the past few days. Last week, the RSI held a neutral value of 50 as support, but recently this level has not passed. Thus, there may be some volatile dynamics during the weekend. Similarly, the Awesome Oscillator, AO, was also below zero. He has not yet shown a strong bearish impulse. The A/D line had a resistance zone that was directly overhead and was indicated by two dotted white lines. If A/D can overcome this region, it will be a sign of sustained demand for the XRP rally. The Directional Movement Index, DMI, showed the absence of a strong trend. ADX, yellow, it was at level 20, ADI just above the 20 mark. Technically, this indicated a bearish trend, but in general meant the absence of a significant trend over the past few days. The $0.35-$0.36 range will be important to protect the bulls over the next day or two. The formation of a lower low below this area will signal bearish strength. Momentum indicators were inconclusive on the lower timeframes. Bitcoin could also strongly influence the direction of XRP in the near future. The U.S. Securities and Exchange Commission has tightened its control over Coinbase after the platform increased the number of tokens it offers to trade, said two of the people who asked not to be named because the request was not made public. The investigation conducted by the SEC law enforcement agency preceded the agency's investigation of an alleged insider trading scheme, as a result of which the regulator last week sued a former Coinbase manager and two other people. We are confident that our rigorous due diligence process, a process that the SEC has already verified, prevents securities from entering our platform, and we look forward to engaging with the SEC on this matter, General Counsel Paul Greville said on Twitter. The SEC declined to comment. The drumbeat in Washington for U.S. regulators to do more to oversee cryptocurrency has grown louder as digital currencies have fallen from record highs, erasing hundreds of billions of dollars in market value. SEC Chairman Gary Gensler focused on trading platforms and said they should do more to protect retail investors. As the largest U.S. trading platform, Coinbase allows Americans to trade more than 150 tokens. If these products were considered securities, the firm might have to register as an exchange with the SEC. Coinbase shares fell $14 to $52.93 in New York, bringing the stock down 79% this year. Coinbase has repeatedly argued with the agency about how it oversees the industry, and last week the firm called on the SEC to propose clearer rules. Meanwhile, after several years of a relatively cautious approach, Coinbase has increased the number of its tokens. Tensions escalated further on July 21, when the SEC accused one of the company's former employees of violating insider trading rules by leaking information to help his brother and friend buy tokens just before they were listed on the platform. Although the agency did not claim wrongdoing by Coinbase, the SEC said it had established that 9 of the dozens of digital tokens the men traded were securities, including 7 that the exchange said were listed. Manhattan federal prosecutors have also charged the 3 men with conspiracy to use electronic communications and fraud using electronic communications. In response, Coinbase published an entry on its blog under the heading, "Coinbase does not place securities." The end of the story. Greville noted that the Justice Department chose not to press charges of securities fraud, despite having considered the same facts as the SEC. He also said that before listing tokens, Coinbase analyzes whether an asset can be considered a security, and also considers aspects of compliance with regulatory requirements and information security of the asset. Investigations conducted by the U.S. Securities and Exchange Division may lead to a regulatory body suing companies or individuals. Coinbase, which went public last year, previously admitted that it had been subject to regulatory scrutiny. In its first quarter earnings report, the firm said it received a subpoena from the SEC to obtain documents and information about certain client programs, operations, and prospective future products, including the company's stablecoin and revenue-generating products. To decide whether a digital asset is a security, the SEC applies a legal test based on a 1946 U.S. Supreme Court decision. In accordance with this structure, the agency believes that the token is usually within the competence of the SEC when investors invest money to finance a company with the intention of profiting from the efforts of the organization's management. Gensler has long argued that many cryptocurrencies fall under the jurisdiction of the regulator and that firms offering them must register with his agency. However, the SEC in most cases does not specify which coins are securities, and exchanges decide whether to list the asset. Platform operators tend to avoid offering these supposed securities because it could trigger investor protection rules, some of which, according to crypto enthusiasts, are incompatible with digital assets. 4 years ago, the U.S. Securities and Exchange Commission (SEC) praised the Coinbase crypto exchange for its rules regarding securities and even allowed an initial public offering (IPO) in April 2021. Now the SEC is investigating the actions of Coinbase for listing unregistered securities. The chairman of the U.S. Securities and Exchange Commission, Gary Gensler, has been criticized for his approach to regulating cryptocurrencies and ignoring history. Gensler believes that most cryptocurrencies are securities. Does the SEC set its own rules? The SEC claims that some cryptocurrencies placed on Coinbase are securities. Last week, the SEC marked 9 cryptocurrencies as securities after 3 Coinbase employees were arrested on insider trading charges. Coinbase Chief Legal Officer Paul Greville claims that the crypto exchange does not quote securities. The end of the story. He also said that Coinbase has an analysis and verification process for listing cryptocurrencies on its platform. The system of rules regarding securities has been highly evaluated and verified by the SEC. Lawyer and crypto enthusiast John E. Deaton criticized the SEC's approach to regulation in a July 26 tweet. He said senior SEC staff had previously praised Coinbase for its securities regulations, but was now investigating the listing of unregistered securities. Moreover, he also doubts that the SEC allowed Coinbase to place tokens such as XRP and others. Whatever you think of Brian Armstrong or Coinbase, regulation should not work like that. Coinbase was allowed to place tokens such as XRP and others. 4 years ago, senior SEC officials praised Coinbase for its securities structure. Now Gary Gensler ignores history. Deaton predicted that the SEC would file a lawsuit against the crypto exchange by the end of the year. Coinbase officials have called on the authorities to introduce clear rules and regulations regarding cryptocurrencies, since the old rules do not cover digital assets properly. Amici Curiae, led by attorney John Deaton, filed a response to the Securities and Exchange Commission's motion asking the court to ban Amici from participating in the upcoming Dober test. The letter came a week after the SEC demanded that the court reject Amici's motion to participate in the lawsuit and dismiss attorney John Deaton for gross misconduct. Recall that the SEC previously asked the court to deprive Deaton's lawyer of Amici status in a lawsuit for making public the name of one of its experts. The Securities and Exchange Commission noted that Deaton's actions led to a number of threats and intimidation of the expert. This prompted the SEC to request the sealing of the identifying information of its other experts to prevent a repeat. Deaton defends his actions by discussing key issues related to the case. According to Deaton's lawyer, before he revealed the name of the SEC expert, the parties in the lawsuit, Ripple and the SEC, had previously identified another SEC witness before filing the motion. I never imagined that there would be problems with the second SEC expert, and I should not have expected this, especially given that the parties disclosed the identity of the other expert, Deaton's lawyer said. The lawyer also added that he publicly condemned all threats and harassment against the SEC expert. Deaton's lawyer criticized the U.S. Securities and Exchange Commission for its hypocritical position regarding the expert's reports. According to Deaton, the SEC previously provided the same expert report to some XRP holders who sued Ripple, alleging that XRP sales violated U.S. securities law. The SEC has willingly provided an expert report to XRP holders because its position coincides with their position, Deaton added. The diametrically opposed legal positions of the Securities and Exchange Commission are consistent with Judge Netburn's sharp but accurate remark that the Securities and Exchange Commission takes its judicial positions to achieve its goal, and not out of loyalty to the law, said lawyer Deaton. Deaton's lawyer also accused the SEC of sacrificing its reputation to achieve its goal of depriving Amici of its status and banning him from participating in the lawsuit. He noted that the Securities and Exchange Commission intends to deprive Amici of the rights to a lawsuit, because the filing of the final court decision is not far off. Meanwhile, Deaton's lawyer went over William Hinman, the former director of the SEC's Corporate Finance Department, again. Amici Curiae's lawyer discussed Hinman's conflict of interest during his time at the SEC. Recall that Empower Oversight shared information about how Hinman blatantly ignored a direct command from the ethics office not to meet with his Ethereum-related Simpson Thatcher. As expected, the response of Deaton's lawyer to the SEC caused a violent reaction from the Ripple community. Attorney Jeremy Hogan, a partner at the law firm Hogan, praising Deaton, said, "Deaton's response may be my favorite report on the Ripple case at the moment. He defends his position on the case, defends his actions, attacks the SEC and attacks the SEC expert, and it's all on 4 pages. And it also happens that it spills onto Hinman and his attitude to Ethereum. Bravo! What do you think are the prospects for XRP in 2023? Write your forecasts in the comments. Thank you for watching this video to the end. Please do not forget to like it and subscribe to the channel so as not to miss the release of new videos, and do not forget about our contest. Write in the XRP comments to add 500 XRP to your account.